I keep saying, don't believe the green on the screen. Now, what I mean when I say that is some people think, oh my God, the market is green and everything is fine and everything is not. Okay? So tomorrow we'll expect to hear from Jerome Powell, which will be the 14th. Today is November 13th of 2022. So tomorrow we expect to hear from Jerome Powell. And I think it's going to be a defining moment. It's going to have to rise the interest rate. I don't see anything differently. Okay, so just listen here to this brief commentary, this statement here on Squawk Box, if you will.
Has not accumulated in the market yet and in the economy. And if the Fed is to be believed, it's still coming. And that, I would argue, hasn't been priced in.
And what she said, just so you know, she said the pain. And so what is she saying? When you're seeing all this green on the screen, some people interpret that as, oh, it's time to jump in. I'm going to jump in. And that's fine. That is fine. But again, the pain is still coming. So let me continue, please.
And so the pain has not accumulated in the market yet and in the economy. And if the Fed is to be believed, it's still coming. And that, I would argue, hasn't been priced in today's movement that we've seen so far.
So today we saw a lot of movement. Wow, QQQ, I think yesterday was around 288. I got up, I turned on Squawk Box, and boom, 296. I was like totally shocked. Okay. I was so shocked, and so was my options play. Last week I had a great week with QQQ. This week not so much, and that'll be the next video. But yeah, this here, the pain is not over. There is definitely more to come. We've had more layoffs, okay, that occur. So this here, we'll see what happens tomorrow with Jerome Powell, but I am willing to believe that we will definitely be looking at an interest rate. I don't see any other way.
Cameron? Yeah, I think that the message from Jackson Hole really was all about jawboning financial conditions to start tightening again, because the Fed saw easier financial conditions essentially working against all their effort to tone down inflation. And so it's likely that if we continue to see this rally that maybe we see from Chair Powell tomorrow, that he does talk down financial conditions and talk about the need for them to remain tight as their mechanism in order to control inflation. So I think that should be a key risk for markets. The more we see the pressure upward on valuations, as well as lower yields and a weaker dollar, which all lead into this easing of financial conditions.
So, Steve, does this count as a swivel or a pivot with a small p? If I don't know. I mean, if we're going to 25, if we're going to 25 at the next meeting, if we're going to 25 at the next one, or is Chair Powell going to say this is exactly what we said? We might go smaller but higher eventually. It could be. It could still say that that's what we're doing.
You've chronicled along with me the changing definition of a swivel or a pivot, which had been, first they're going to cut, then they're going to pause, then they're going to the new swivel idea is that they're going to raise at a slower pace. That is accurate. Right now the Fed is feeling its way through the darkness of trying to figure out when inflation is going to come down. So it's a little bit more concerned than it had been in the past about the idea of the rate hikes doing more damage than they need to do to the economy here. So I think the idea of a 50 followed by a 25 is not crazy, but I still think, and this is going to be a key thing, maybe we'll talk about this more tomorrow when we talk about the Fed again, is the idea that in the projection of funds rate that's going to come out from the Fed itself, you are going to see an increase from that 4.6% to something maybe 4.8 or 5. We've had a lot of people on our air, Joe, Fed officials talking about 5 being a benchmark. So you're right in saying that, yeah, they may go slower, but they may go higher. And finally, guys, I'm just not seeing any evidence that benefits are keeping prime age people on the sidelines in the data that I look at. I looked at it this morning after we spoke, Joe.
Oksana and Tomas, I want to we have a minute left. Why don't you start, Oksana, if you have some nuggets?
I think at this point, the market has gotten entirely ahead of itself and pricing some kind of a pivot
We haven't even gotten to any place close to what the Fed has been telegraphing that it wants to get to in terms of the terminal rate. And pivot at this point, as they say on my team, stands for pretty insane valuation on treasuries. The bond markets have gotten way ahead of themselves. We haven't seen the pain that's going to hit credit from a fundamental standpoint and widen spreads, and that's going to be the next punch to portfolios. But even the interest rate driven pain, which has been all the pain this year, even that has not been done. We've seen this rally into year end, and I think next year we're going to see some pain on that front because we are definitely not out of the woods here as far as inflation is concerned. And we have to contend with living with elevated cost of capital for some extended period of time. I do not think the markets are pricing that in.
Tomas?
Well, I think, this is obviously good news relative to expectations, particularly, I think, core is coming down now 4 months in a row. It's very healthy, particularly because housing, which is lagged, obviously, is 40% of core. So, and housing has been about 0.5 the last.
Okay, so I'm going to stop here. Now, what I want to get to was she mentioned about pivoting. Okay, or she mentioned about priced in, and also the first young lady you saw, Neela Richardson, she also mentioned that, hey, if it's to believe, it's not priced in. So that's why when I tell people, I say, hey, the green on the screen
and today's movement that we've seen so far.
Yeah, the pain is not calculated in. And it's very important because it's just like you say you have a budget. Okay? You have a budget, and let's say for your household expenses it's going to be, I'm just going to say $5,000 a month. Okay? We'll break it down to $100 a month. So to run this house, let's see, just for the sake of math purposes, which we all can do, but just making a simple example. Okay, so if you got $100 and the rent is $40, you got $60 left. Utilities are going to be $200. Okay, now you got $40 left. Now you've got insurance, that's going to be $100. Food, $200. You have $100 left for incidentals and gasoline. Well, the incidentals and gasoline, the gasoline alone, this is not going to work. So there's not enough money. So when they're saying the pain is not baked in, yes, I totally agree. So the green on the screen, just in my opinion, some people are buying in for whatever reason. Me, I'm a shorter. The green on the screen, I just don't, it's not real. A lot is not baked in. And if you consider all the factors involved, what's affecting us in inflation, more than likely you begin to see a lot of red on the screen. So I'm going to guess after tomorrow when Jerome Powell maybe clarifies things in his speech, Jackson Hole, I'm willing to bet then that a little realization is going to kick in. As for a Christmas rally, I don't see it. If it is going to be a Christmas rally, I think we're in it right now. And if it continues, through Christmas, I'm thinking I think it's all, these rallies it's false. I'll just say it's a temporary rally. So rally while you can now, because the first quarter of next year, right now, some people are tap dancing on top of the pain. They're ice skating. But the pain is real, and the pain is coming. Thanks for watching. Have a great day.